Well, let's look at that. You've got a mixed bag there, haven't you? On the one hand, production up 3%, but cash operating costs pulling things down. So give us the big picture from your perspective.
Well, what we try to do really is to compare nowadays more the comparative quarter with the previous year's comparative quarter. And those trends are healthy. We live our lives in 3 months cycles nowadays, one quarter up on the next quarter. And more often than not, you'll find that specifically in the South African gold mining industry, there are cycles within cycles and dynamics that move from quarter to quarter that sometimes give you somewhat of a distorted picture. So comparative quarter on comparative quarter, both the cash flows are up quite nicely and headline earnings are up 8%. Having said that, though, I think the profile of mining that you're seeing, the type of mining that you're seeing with us moving more towards the lower grade, higher volumes kind of things, could be indicative of more or less where I think these earnings could be trending towards in the near term as well. So we're mining more slimes, which obviously means we spend more money because the total throughput is up, but we are also mining a slime with a slightly lower gold content.
Operationally, there's some interesting things in your report. You've built a 50-kilometre pipeline. Now, presumably that might be slime. I'm not sure. You can tell us what it is and how that works and how it's improved your operation, because really you're taking old workings and squeezing what's left out of them.
Absolutely. I think we're very fortunate in the sense that we have infrastructure which provides us access or the ability to access the slightly lower grades and but high volume old tailings. All the plants that we had in and around the Johannesburg area were smaller plants designed to treat between 2 and 300,000 tons of material per month. We now have a facility that can treat upward of 2 million tons of material per month, which basically means that we can take full advantage of the higher gold price and make use of the improved economies of scale and bring much lower grade materials into it, which basically means that the amount of tailings that we can bring into our plant, available tailings, has certainly increased quite a lot. What I'm basically saying is that we can bring these lower grade tailings, these lower grade mine dumps that are younger mine dumps, we can now also bring those into our plant infrastructure because of a combination of the much higher gold price and also the fact that we have economies of scale on our side. So the pipeline that you're referring to is in fact a pipeline that links up the West Rand, Roodepoort area, Soccer City area, across a 60-kilometer footprint right all the way through to our Ergo plant in the Brakpan area.
Of course, Ergo is the name I think that most people would associate with reclamation of old dumps going back 20, 30 years. Now, the gold price you mentioned, and it has been high, and how much does your operation depend on it staying that high? In other words, when you lie awake at night, what is the level below which it must not go?
Well, in dollar terms at this stage, we are maintaining about a $600 an ounce clear cash margin after maintenance capex. So the margins are certainly very robust. What does seem to have happened is that the band within which, or the relationship between the dollar and the gold price and the rand, that relationship certainly seemed to have changed a while ago. So whilst what we sometimes see is that if the dollar price of gold goes down, then invariably the rand also weakens because that's more often than not a sign of an increase in the value of the dollar. So it does seem as though that relationship between the three key components that drive sustainability for us in the medium and long term, that those are definitely trending in a happy relationship from a gold miner's in South Africa's perspective. Well, we've got about $600 margin, but if that margin shrinks in dollar terms, then we're likely to see a decrease in the price of the value of the rand.
Certainly sounds like there'd be a cushion for the foreseeable future, hence your investment. The word hedging has come up again. For a couple of years, we never heard it, except when people like Ian Cockrell and the Anglo Gold Ashanti CEO, Mark Kutufani, hedging is either not going to happen or we're going to de-hedge. And Anglo Gold Ashanti was said to have saved a great deal of money because it de-hedged. Now it's suddenly back. People are saying this gold price is too high to stay there for too long and certainly not going to get much higher. We need now to cover ourselves for the downside. Do you worry about that?
Well, I think there are certainly some analysts that suggest that in the near term there could be a slight correction in the price of the gold. The price of gold, it has run quite hard and it has run hard for long. But at the rate at which new money is created or new additional the rate at which governments are incurring additional debt just in order to cover existing debt. I think that is always going to provide good support for the gold price. But as long as old debt's paid with new debt, I think the gold's a good asset to be in.
So in other words, you're not considering hedging. It's not something your company does.
Certainly not. No, we're not going to be hedging anytime soon.
Just on the operations again, Blyforeitzig, known as Blyfour in the industry, one of the old mines. Are you disposing of that to Village Main Reef, which of course is run by Bernard Swanepoel now, who was at Harmony? That sounds like contiguous sense. You've got an old working. On the other hand, you do specialize in those old workings. So it was announced a while ago, but what's the rationale?
Well, it's really horses for courses. Bernard, I think, knows how to run these kinds of mines. He knows how to rationalize them, how to position them for profitability. And of course, Blyfour will now be part of a family of 4, whereas in the past it was an only child from an underground mining perspective. Which basically means that you could rely on a wider skills base. You could basically straddle skills across different operations and so forth. So I think when we talk about old operations, our focus is pretty much on recycling the old tailings from those operations. We've done that at Blyfour, and that circuit is coming to an end in the not too distant future. Leveraging the opportunities of older mines by optimizing efficiencies and so forth, and combining the right sort of assets in the right portfolio. I think that's pretty much what Village is very good at. And as a consequence, we decided to take the mine out of our portfolio and exchange it for shares in a company that we believe can unlock some value and give it some impetus.
And Niel, finally, Zimbabwe, a difficult neighborhood to operate in. I didn't realize you were there as well. Is it similar, same old mines that you've gone in to exploit?
It's more a matter of high volume type of resources. There's some alluvial deposits in some of the river areas that bear a resemblance to the movement of mine residues. So I think the logistical capacities and skills that we have in our organization certainly allows us to look at those sorts of assets, and also near surface hard rock mining. But it's really early days. We're basically collecting leases at this stage and making sure that we're doing enough to justify us holding on to those leases, and trying to define the sort of ore body where we could also maybe send in some yellow machines and mine at bulk. But it's still very, very early days, and obviously there are also a number of things that I think they still need to sort out with regards to their regulatory dispensation. There's talk of all sorts of land leases and so forth, and one would have to look at the long-term viability of those resources. At this stage, that would be a clear holding fee, nothing other, because we don't have any revenues flowing in there. So it's really, I suppose, it's collecting ounces and creating some sort of an option, which we may want to trigger if the political circumstances and also the economic circumstances were to justify it at some point in future.